Hi there, welcome to Kneppy Invest. Exciting video today because I am going to be looking at a company I have not featured before in one of my videos, and in truth be told, I have not looked at this company at all in the past. And that company is Credit Clear. There are a few reasons why I haven't looked at this company before. They listed it on the ASX about 2 years ago, towards the end of 2020. This company, even though they are growing their receipts and their revenue at a pretty good rate, they were not operating cash flow or free cash flow positive, and the valuation was well above $100 million. In fact, could have been well above $150 million. However, in saying all that, they did release their September quarter report, and possibly this is a very important quarter for this company because they are operating cash flow and free cash flow positive in this particular quarter. And if they can continue being operating cash flow and free cash flow positive, perhaps this is the inflection point for this company. So what exactly does Credit Clear do? They call themselves a repay tech company. So I'd probably say they're a fintech company in the receivables management solutions area. So I'll talk a little bit more about what this company does in the next slide. They were founded in 2015 and listed on the ASX 27th of October 2020. So this company has just celebrated a 2-year anniversary on the ASX. The current CEO is Andrew Smith. Now, Andrew Smith was a founder of another company, and then Credit Clear bought that company and then made Andrew Smith the CEO of Credit Clear. So in a way, the purchase of that particular company was not only for the company, but also the people who were running that company. And the largest shareholder of Credit Clear is Mark Casey. He has a 9% stake in the company. He's also one of the co-founders of Credit Clear, and he's also on the board of the company. Now, the current market cap of Credit Clear, and this is at a share price of 44.5 cents, is 163 million. So that is one of the reasons I haven't had a close look at this company, just because it did look like, since this company was not operating cash flow, free cash flow positive, and they were not profitable, it did seem perhaps that $163 million market cap was a little bit too lofty for this company. And the T code for Credit Clear is CCR. Now, this particular slide I did find in one of Credit Clear's presentation, and I really liked how this slide is presented in terms of that it gives me, or gave me, a lot more clarity in regards to what exactly Credit Clear is providing to their customers and how they can be helpful. It also gave me a good idea on what the individual companies within Credit Clear actually do, because there are quite a few companies within Credit Clear. For instance, there's Credit Clear, ARMA, Credit Solutions, Force Legal, and Oak Bridge Lawyers. Now, when you view the receivables timeline, and when I say receivables timeline, this all comes back to a company providing a service or selling a product to someone. And that someone then promises to repay that service or that product within a certain amount of time. Might be 90 days or so. And then, of course, they could pay that bill straight away, or repay that bill in 45 days, repay that bill in 90 days, or then forget to repay that deal. And then after 150 days, you might be seeing some problems. So what Credit Clear is trying to do is improve the relationship between the customer and the organization or the company who has provided that service or that product. And the reason why they're trying to improve the relationship, particularly if a bill is past due, is so they can improve the amount of bills that are past due that actually get paid in the end. So companies like Credit Corp don't get these ledgers of all these debts that have not been paid. So you can look at the receivables timeline over like 100 or over 150 days as early stage, mid and late stage, and legal. And Credit Clear have their hands in each single stage. So in the early stage, we have Credit Clear, sort of the original company. Then in the mid to late stage, so that is a stage where the bill has just become due or is now past due, we have ARMA and credit solutions. ARMA is a company that Credit Clear did recently acquire, who had Andrew Smith, the current CEO. So sort of like they acquired the company and also the skill, the talent within that company. So there's sort of a relationship also between those early stage companies and the mid and late stage companies as well. So they call this the hybrid approach to collections. And traditionally, when there is a bill due, there's going to be a lot of phone calling, that sort of thing. And Credit Clear says, no, we don't want to do that first. We want to send text messages and that sort of thing because they believe that maybe text messages will be more successful in the long run. And they actually do use AI in regards to how many text messages might be sent, when they're sent, and that sort of thing. But when the bill is over 150 days go past due, that's when legal comes into play. So Credit Clear has a couple of legal companies, including Force Legal and Oak Bridge Laws. So again, it's getting a little bit more serious when the bill is more than 150 days past due. Now let's have a look at the quarterly reports for Credit Clear. And before we have a look at the financial year 23 September quarter for the company, let's go back 1 year ago. And I just want to have a look to see how this company has grown over the past year. Now, receipts to customers for Credit Clear, 4.1 million. And the company was operating cash flow negative, but by only $848,000. And the company had enough cash on hand, $9.6 million of cash. And when you do look at the financing and investing activities, they don't spend a lot of money in those areas, only $277,000 on intellectual property. So that means if this company can become operating cash flow positive, there is a good chance they'll also become free cash flow positive as well. So let's have a look at the September quarter for financial year 23, just to see how this company has grown and whether they have now become operating cash flow positive. And I think I've already given that away earlier in this video. And this company has grown significantly in the past year. In fact, receipts have increased by $4.8 million. So it's more than doubled in the past year, up to $8.8 million. And even though the spending has increased, staff costs up $2.1 million, administration costs up $1.4 million, receipts growth is stronger than the costs increase, which means this company is finding a little bit of scale. And that also means that the company has gone from being operating cash flow negative to operating cash flow positive by $531,000. And they're very close to being free cash flow positive as well. They did spend $405,000 on intellectual property, and the cash burn is only $200,000 for the quarter. So the cash on hand has decreased to only $10 million. Well, I shouldn't say only $10 million, but $10 million of cash on hand does give the management a little bit of flexibility moving forward, particularly if they can become free cash flow positive and start increasing their cash on hand. It gives a lot more flexibility to the management of this company in terms of what they do with that cash on hand. They could continue to acquire companies, and instead of issuing capital to shareholders in terms of capital raisings or going into debt, they can actually use the operating cash flow, the free cash flow, to acquire companies. And that is a sort of business model and the stage of a business cycle I like to be invested into a company, because that means the company is now self-sufficient. Credit Clear hasn't quite shown me just yet, but they are on their way there. So that is why this is a potential inflection point, a very important inflection point for this company. I need confirmation. I need to see another really good quarter in the next quarter, the current quarter, the December quarter, to really confirm that this company has reached that really important inflection point. And as we take a look at the receipts history for Credit Clear, we have 8 quarters of history here. And typically, I want at least 2 years or 8 quarters of history to see if there is any discernible trend in receipts growth. And receipts growth is definitely there for Credit Clear, increasing from 2.2 million in the December quarter 2020, the year they did list, or the quarter they did list on the ASX, to 8.8 million. So receipts have quadrupled over the past 2 years. Now, some of this is because of the acquisitions the company has made, but some of this is also because of organic growth. But the main thing here is receipts are growing at a consistent rate through time. Not only am I thinking about whether this company has reached this important inflection point, I think the management of this company is also thinking that by this particular slide, which was the fifth slide in that presentation, and they've shown you the history of their cash flow and operating profit over the past 5 quarters. And this does look good because in the first quarter of financial year 23, the September quarter, not only was this company operating cash flow positive, but it was the first quarter that they showed an operating profit. Now, that operating profit is fairly small at $300,000, but this could be that important inflection point where this company has not only become cash flow positive, but also profitable. And I think a lot of investors want to see that sort of thing for all these type of companies. Show me the profits. So it looks like possibly Credit Clear is showing the market at large that they are profitable. Now, it's well good and said that this company has possibly reached that important inflection point, but I think the company still needs to prove it to the market at large because right now the share price of Credit Clear is not in a well-defined uptrend. It's really going sideways, and it's been going sideways over the past, we'll say, year and a half. Yeah, about a year and a half. Now, when this company did list on the ASX way back in October 2020, there was a fair bit of hype in this company in the first week or even 2 weeks that this company did trade on the ASX because the share price actually increased from 40 cents to a high of $1.20 in that initial hype phase. And then that initial hype phase died away fairly quickly. And then the shares of this company fell quite consistently from then all the way through to the low in the share price, which we did see in June of this year. But it does look like that downtrend has coming to an end. And it does look like potentially the shares of this company want to move up because we are starting to see some higher lows. But what I like to see is some higher highs as well, because it does seem like between about 50 cents and 52.5 cents is a strong resistance level for this company's share price, because we have seen the shares of this company get in that zone or in between that zone 3 times in the past year and a half. First time was back in April of last year. Share price got to about 52.5 cents and then pulled back. And we have seen the shares of this company get just above 50 cents twice since September, and we have not seen the shares move higher from there. So I'd like to see 52.5 cents broken, and if we do see 52.5 cents broken, I think the shares of this company would be moving into an uptrend, and that would tell me we have also seen a higher high as well, and that is possibly the time to start getting excited about this company. And ideally, would like to see a breakout in the shares of this company coincide with some really good financial news. So maybe that would be the release of their December quarter to confirm that the September quarter, or the June quarter, September quarter was an important inflection point. And if we do get that sort of signal, I think this could be exciting times for Credit Clear and their shareholders, particularly if we see the share price break out above that 52.5 cent level. That's all I have looking at Credit Clear's September quarter report or results for financial year 23. Could be exciting times for the company and their shareholders because maybe the company has reached that very important inflection point where they've gone from loss-making to becoming profitable. So if you do have any questions, any thoughts about Credit Clear, if you know way more about this company than I do, and you want to leave some of your thoughts in regards to this company, if you're bullish about the future of this company, I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.